Market timing doesn't really work. Are you serious? Every day here at chartingwealth.com, we chart the markets and we find over and over again that our timing does work, particularly when it comes to weekly vertical crossovers. Always love to start with a quote. This is the motto of chartingwealth.com. Study the past if you would divine the future. The past is many times a roadmap for the future. As Mark Twain said, history doesn't repeat itself, but it rhymes, and it sure rhymes a lot. We hear all the time, it's impossible to time the market. Nobody can tell the future. Dollar cost averaging, that is just letting things go up and go down, that overall you'll do fine. Well, you know what? We question that. We question it every day here at chartingwealth.com because of the magic of the weekly vertical crossover. What is the weekly vertical crossover? It is the price percent oscillator moving over the red signal line. The price percent oscillator is the main indicator we use here at chartingwealth.com. It's basically a percentage version of the moving average convergence divergence indicator. The nice thing about it, since it's a percentage, then we have it bounded. And what it does for us is it allows us to be able to compare different charts across the board, such as SPY, which represents the Standard & Poor's 500. We can compare that to other stocks that are in the S&P. We can compare it to other indexes. We can compare it over time. It's a percentage indicator, and we have found over and over and over again when we particularly use the weekly chart and we look for weekly vertical crossovers, that is where, again, the price percent oscillator crosses over the red signal line, which is nothing but a exponential moving average line that is 8 time periods. In this case, it would be 8 weeks. We find that these areas of crossover show us when investor sentiment changes drastically. And when that occurs, it shows us when it's going down that fear is controlling the market and people are getting out. When I say market, I could be referring to an index like the S&P 500, 500 big stocks, or it could be just a simple stock itself. But it shows you that fear is controlling it when it crosses over going down, and greed, or the desire to have the stock or ETF, is controlling it when it crosses over going up. Now, not every stock is trackable, not every ETF is trackable, but when we find those that are, and we say chartable, and again, this is technical analysis, what we find over and over again is we can see these crossovers and they can actually help us time. I'm not asking you to take my word for it. We're not a stock calling service. We're an education firm, but we want you to practice with us and see if indeed it does not work. It doesn't cost you a thing to practice trade. That's what we encourage every day at chartingwealth.com. In fact, we analyze the markets every day. We go over 4 big ETFs. The S&P 500 is one. The NASDAQ 100 is another. 20-year U.S. government bonds is the third. And the last is gold. Check out what happened in the market crash that started with the COVID-19 breakout. We saw the market crossover going down back there in late February. We had a weekly vertical crossover signal, which of course said, get out. And the market dropped down. And then when it started to recover, we had a weekly vertical crossover going up. On our charts, these are marked. We always keep up with the latest one. And as I record this training for you, this is the last crossover we had. It was one going up. That happened in early May. And you can see how the market tracked up for several weeks, giving us a grand opportunity to jump in and take a chunk out of the middle. We didn't cross over at the very bottom. Bottoms are very hard to call. But we saw after things topped where it crossed over and where we were going to have a lot of down movement, and then where it crossed over going up, where we would have a lot of up movement. How well does this work week in, week out, month in, month out, year in, year out? Well, the first 5 months of 2020, you see how well it worked. We have so far had, 9, 10, 11, every single one of the weekly vertical crossovers from January through the end of May, that is into June of 2020, every single one worked. How high did they go? Well, you can see the percentages. The lowest was 1.81%. The highest was 29%. That was in a crossover going down. Now you might say, wait a minute, who wants to buy something when it's going down? They're inverse funds. There are also options that give the opportunity. We're not saying you would capture all of these gains, but those were there for the taking when the weekly vertical crossovers occurred. That's how accurate these are. So for anyone who says you cannot time things, well, you can darn sure read stock charts and know when it makes sense for you to get into a practice trade, when it makes sense for you to get out of a trade, and you can sure follow these charts if you will take the time and energy it takes to learn it. 10 to 15 minutes a day is all we ask. Now we have indicators that show us various sentiment. We have trend lines that you see on our charts. There's a gold trend line showing the weekly vertical crossovers trend. We use those to show us weakening or building trends. We also use candlesticks. We use Heikin Ashi candlesticks, means average pace in Japanese. It's different than your typical candlestick, high, low, open, close. It is actually formulated differently, but it helps us a great deal in seeing the average pace of price movement. We've got great trainings on how to use the Heikin Ashi candlesticks. They show us the slowing or the acceleration of price movement. We have Bollinger Bands that we use. Those show us volatility up and down. They are the blue dashed lines on our charts. Where they get tight, it shows you that volatility has decreased. When they start to spread out, it shows you how volatility has increased. They help us see that, which is very important. The price percent oscillator, that's our big daddy, king daddy indicator. That is where we have our reversals, either going down or going up. They help us see real heavy changes in trends. They confirm reversals and directions up or down. And of course, we have the derivative oscillator that I've really not touched on. Those are the light red and green vertical rectangles that you see on our charts. They are leading indicators. They show us again price movement, how it is slowing or accelerating, and we use those time and time again to help us see overbought and oversold conditions. So my friends, when somebody tells you that market timing doesn't work, I would contend that we challenge that adage every single day here at chartingwealth.com. You don't want to know, if you want to know what it is we do, how we do it, how you can learn to do it, then you need to join us 10 to 15 minutes a day. Go to chartingwealth.com, sign up. It's free. I love this quote by Albert Einstein. Any intelligent fool can make things bigger, more complex, and more violent. It takes a touch of genius and a lot of courage to move in the opposite direction. Well, my friends, grasp that genius, grasp that courage, move in the opposite direction. Move away from the people who tell you you can't to the people who tell you you can. We always love to hear from you. cw@chartingwealth.com is our email address. Again, go to chartingwealth.com. Sign up for our daily reviews. Lots of great information you will get there every day. God bless you. All the best from the whole team at Charting Wealth World Headquarters.